Nowadays, there are a lot of those influencers across social media shout about products that deliver 25%, 30% return. Greed trap, in a way, if I have to say.
Mr. Buffett's most famous statement everybody has heard like a zillion times, where he said that you should, be greedy when others are fearful and be fearful when others are greedy. Now, that is not a generic statement. That applies to every product, that applies to every market cycle, that applies to every instance.
People like us who are there 24/7 in the market, we never try to attempt. So, does it mean that we are fools?
No, let me clarify. Timing is very important. Question is if you can get it right.
And a lot of people are that I should accumulate the gold. But disbursement or distribution phase is left to chance.
So even after retirement, you cannot completely cut the cord with the growth prospects. And that is where then the diversification of asset classes will matter.
Market has delivered this 15% and people's portfolio is not compounded at that rate. And that is what the behavior gap is.
Right? So people make the biggest mistakes when they're emotional and not kept a good discipline of what is the distribution bucket and what is the growth bucket.
Welcome to Fincart, where we uncover the truth behind investing and money. The third episode talks about the missing link in every Indian's investor's portfolio. Now, investment in SIP, mutual fund, and many products are growing, and yet there is a lot of uncertainty in people's mind. So let us find about what are the missing link. For that, we have Mr. Aashish Somaiyaa, who is the CEO of WhiteOak Mutual Fund. Ashish has over more than 25 years of experience in the mutual fund industries. He is built WhiteOak from scratch, and prior to that, he also built Motilal Oswal Mutual Fund from the starting, and having played multiple roles within the asset management industry for about 25 years. He will help us to unveil the missing link in every investor's portfolio. Welcome, Ashish. Now, Ashish, most people are investing money, and yet there is a lot of uncertainty around it. Okay, and we are happy to have you out here to unravel what's the missing link, because most people start ad hoc investing in the money without a real sense of direction. And let me share, please share your insight on it to help us understand, is this the right way of investing or not?
Yeah, actually, what one has seen over the number of years, right? I mean, is that people generally are very drawn to or very attracted by products, by returns, correct? And once long back in an earlier career, earlier organization, we had done some research. Typically, Tanvir, you must have seen that somewhere, corporate employees in the month of January, they'll get an email from their HR team
Yes.
saying that, you send your tax related investments, whatever you have done for Section 80C. Now, I don't know what will happen in new tax regime, but till now, this is what has been happening. And when we did that survey, we just wanted to find out that what is the modus operandi, what is the process people follow to decide on their tax saving investment. And, one of the striking things we learned is that whenever this January comes, in corporate setup, people ask the people who they have lunch with that, भाई तुमने टैक्स बचाने के लिए कहाँ पे इन्वेस्टमेंट किया मेरे को बताओ. Then somebody will say that I have bought this ELSS fund. Somebody will say that I have done, more investment in PPF, voluntary PPF. Somebody will say NPS. Somebody will say some insurance policy. So what is happening is that people make decisions on the spur of the moment, impulsively, or attracted by some emotion, or attracted by some numbers. And ultimately what happens is that you're supposed to invest as per your goals and your objectives. Like let's say that if we want to go from Noida to Gurgaon, it's a difficult journey. Correct. But you will see how much time you have. You will see what connections are available. You will see what's the weather, what is the most optimal way to reach, what time of the day you are going. And then you will decide how to go. Right? Maybe if it's 6 in the morning, you might take your own vehicle. But if it is 12 in the afternoon or 11 in the morning, you might say that, okay, I don't want to drive, let me figure out some other way to go. You never decide which vehicle or which transport to use unless you know where you are headed, right? I mean, instead of going to Gurgaon, if you want to go to Mumbai, then probably the question of driving is not there. You will go by an aircraft, correct? So, investing, selecting an instrument for investing without deciding why you are investing is actually the equal of selecting a mode of transport without deciding where you are actually trying to
Very
reach.
good.
Yeah.
Very beautifully articulated. In fact, I was reading also in neuroscience, there is something called reticular activating system,
Yeah.
which is kind of a small part in the brain. It's like a gatekeeper which activates your brain if you write your goals, and the
Right.
probability of achieving becomes much easier. And yet, what we realize that people somehow fail to do financial planning,
Yeah.
and there is a lot of reluctance there. What do you think? Why do people have such kind of behavior? We know we need to go to a proper doctor for but we go to the over the counter medicine to buy a pop-up pill.
Yeah.
Why is
Same
that
thing.
so?
See, I think the challenge is with everything to do with discipline. For everything. I mean, see, look at it this way. For example, a lot of people are told that they should, use a dietitian. A lot of people are told that they should go to the gym, right? Now, take a simple example. Most of us live in some gated complex or some society or some place where we'll have a gym, correct? But to go to your own gym, you fail to do it. Then somebody will appoint a personal trainer, right? Now, if you really ask me, the biggest utility of a personal trainer in my life, I know when I go to the gym, I know what to do.
Correct.
But why I need a personal trainer is because कम से कम वो 5:30 को घंटी बजाता है. Because if he doesn't come, then I am not going to go down.
You bet, yes.
Correct. Same way, if you see, for example, dietitian. By and large, at a certain age with certain experience, we all know what to eat. But basically, what is my dietitian doing? There is a WhatsApp chat where there is me and my wife and my dietitian, and 3 times in a day, that person is asking me, "What did you eat? Are you walking or not?" Right? So you have to answer someone, correct? So the point is like this: that for everything which needs discipline, with the best of intention, for everything which needs discipline, people actually fail. It starts right from, I mean, we all knew that in the month of March we'll have exam, but we started studying in end of February.
Correct.
There are one in 2 or 5 or 3 or 10 in 100 which are self-motivated, disciplined people.
Yes.
And the rest of all actually need support. So you need a wealth manager. You need somebody who will keep you on course.
Like a coach there.
Yeah, you need a coach. You need a wealth manager. Somebody who will keep you on the journey, right? I mean, a lot of people think that they can manage money on their own. I mean, even if they are highly qualified and even if they can actually manage money on their own, still they need somebody to keep them on the path. You need somebody to keep, your emotions from coming in the way. Correct? You need somebody to prevent you from impulsively buying the hottest product. Correct? So you may be very intelligent, you may be highly capable, you may be very moneyed in financial terms, but you need somebody to keep you on course. That's the whole problem. So everything which needs discipline, you need some external reinforcement.
No, you've touched a very important and good point. The hottest investment product. In fact, nowadays there are a lot of people on YouTube and those influencers across social media who are coming and trying to shout about products that deliver 25%, 30% return
Yeah.
and luring investors. What should a normal person be wary of against such kind of greed trap, in a way, if I have to say?
See, I think that you mentioned about greed and hottest product and, somebody trying to attract with 25-30% return. I think that, Mr. Buffett's most famous statement everybody has heard like a zillion times. So it's almost become a cliche where he said that he recommended to investors that for success, you should, be greedy when others are fearful and be fearful when others are greedy. Now, that is not a generic statement. That applies to every product. That applies to every market cycle. That applies to pretty much every instance. So, for example, if somebody comes and says that, look at this fund, it is up 30% in the last 1 year, and this is the one which is the elixir of life, you must all buy it. And then you find that, you check that how many people are putting money in that fund, and you find that everywhere only that fund is being spoken about. And last year the corpus was 10,000 crore, now the corpus is 30,000, 35,000 crore. Everybody is investing in it. It's the talk of town. Then that thing should get activated, no? That be fearful when others are greedy, right? I mean, it's not so easy, correct? So what happens is that for successful investing, in Mumbai language we say thoda ulta khopdi hona jaruri hai. You need to be able to think slightly. You need to be more perspicacious. Like, you need a more wider perspective. You should not get caught up just by what one person said about one particular investment. You need a broader perspective. You need to keep that picture in mind. And Mr. Buffett didn't say that just about equity markets in general. It applies to every investment. It applies to every timing in the cycle. And also it applies to every asset class. And it applies to life and markets in general. Things are not as easy as it is made out to be. Correct? So that statement that you should not be part of what others are doing and you should be slightly different or away from what others are doing, that is very important to keep in mind.
And what are your thoughts on a lot of people I've seen try to time the market? They try to predict the market and they try to time the market. And at least for us, people like us
Yeah.
who are there 24/7 in the market,
Yeah.
we never try to attempt.
Yeah.
So does it mean that we are fools?
See, I'll tell you, Tanvir, what I've noticed is I speak to, you handle like a large base of investors. So whether it is your profile or mine, we are blessed because we meet a lot of investors, correct? One thing which I would like to step back and clarify, that, when we tell people that timing is not possible, somehow people seem to be hearing from us that timing is not important. No, let me clarify. If you can get it right, timing is very important. Question is if you can get it right.
Correct.
So we all have learned the hard way. Timing is important. Timing is everything. Timing is important. But is it actually possible to do is the question mark. So let me connect to that previous statement, greedy and fearful, what I mentioned. By that logic, in March 2020, everybody should have been buying. No, that was what better timing will you get here? I mean,
Correct.
Today Nifty is nearing 25,000. Just 5 years back, it was 8,700 at the
Correct.
lowest point.
Correct.
So what better timing could you have got? But tell me something, in March 2020, when you open television, you open the very same YouTube that you spoke about.
Correct.
And you speak to the very same influencers. In March 2020, when there is COVID, what are you likely to hear?
All pessimism.
They will say, boss, 1918 में Spanish flu आया था, पता नहीं कितने लोग नहीं बच पाए. 1992 Surat there was a plague. 2003 in Hong Kong and South Asia there was SARS virus. And vaccines usually take 10 years to develop. And these are unprecedented times. This is black swan. Banks will go under. You and me will be locked in our house for 2 years. If you open, you will be told basically that, you are the next dinosaur, boss. Nothing, you're not going to come out of this. Now in March 2020, when this is the environment, who will buy? In 1 month, the market fell 40%.
Correct.
How can something fall 40%? I mean, index fell 38%. Lot of stocks fell 70%.
Correct.
How can something fall 70%? There are only sellers. There are hardly any buyers.
True.
Or the sellers are massively outnumbering buyers. Or that buyers are buying very, very slowly and very, very little. Correct? So the sellers are overwhelming the buyers. Nobody is buying practically. So in March 2020, who will buy? The person who has a little bit of a small window open in their mind that, look, yes, this environment looks horrible, but the history suggests that in thousands of years, till now, we have not become dinosaur.
Correct.
So something will come out of this. Be greedy when others are fearful and let me buy. Correct? Now this is easier said than done.
True.
This is one thing to keep
Otherwise,
in mind.
everyone would have been rich.
People would have been buying. No, how will it fall? Nahi, but hua nahi na.
Nahi hua, correct.
Now I'll give you another example. Our long history suggests that from India's liberalization in 92, long history suggests that Sensex itself, with dividend yield, Sensex itself has compounded about 14% year on year for 32 years.
Correct.
Which means on average every 5 years the index doubles. In good times 3-4 years, in bad times 7-8 years.
Correct.
So then technically everybody should have doubled their money, in 4-5 years. Why people are struggling? The reason why people are struggling is because the long average is 14%, but literally every year from the highest point, once the market falls 15-20%. And that is Nifty. If you take small cap index Small cap index also long range history will be 17-18% compounded. But every calendar year from the highest point once, it falls 25-30% from the high point to the low point.
Correct.
We are in 2025. In this year, from the high point to the low points, Nifty small cap was down 23%. So timing is important. Timing is everything. Every year the market gives you an opportunity to time. But people are not able to do it because emotions are coming in the way.
Correct.
There's enough and more opportunity to time. Do it if you can. This year in April 2025, small cap index was down 23% from the peak. How many? That time people were stopping SIPs.
Correct.
Correct. In March 2020, people were only selling, nobody was buying.
Correct.
So timing is important, but it's not easy to do. And it is the emotions which overcome all your best intention of timing, etc., etc. It's not easy. It's not easy to be fearful when others are greedy.
So if people are not able to time, then what do you, according to you, is an appropriate way of ensuring that we keep investing and
Correct.
keeping the long-term benefit?
Correct. So, there is a very important statement. Now, I'll just digress a little bit. It is attributed to Mr. Winston Churchill, obviously, who was Prime Minister of England. So he, being an expert, right, he was asked that what is the best form of governance? So he said that democracy is absolutely the worst form of governance, except for all the others that have already been tried. Correct? So what happens is when you tell people do SIP, they'll say, boss, तुम ठीक से advise कर सकते हो तो करो, ये सबको SIP मत बोलो. The point is that SIP is the worst form of investing, except for all others that have already been tried. Correct? So given that all that I told you about timing is important, but it is not possible to do because emotions come in the way, so then the second best option is that you invest at every level.
Correct.
So in 2025, for instance, you may have invested at 26,000 Nifty, but in April 2025, you may have also invested at 21,700 Nifty.
Correct.
So if you had, for 12 months, if you have 12,000 rupees, I would love it if entire 12,000 rupees went when Nifty was 21,700. But given all the challenges, it doesn't work that way.
True.
So the second best option is that you invest every month. That is what SIP we are telling people. And secondly, anyway, we all are dealing with a lot of lot of people, in your erstwhile role or me now, we are salaried individuals.
Correct.
So any which way, we have some surplus every month. And any which way, accumulating the surplus and buying it exactly at the bottom is not going to work out. So the best is to spread it every month. So you do SIP.
Great. Good. So now I'll tell you one thing which comes very common to us also is that corporate executive
G.
now are overwhelmed with the work-life balance. Okay. And a lot of people aspire that they want to retire early. And even if they don't retire early, this is one of the most certain goals. Okay. What I've seen, unfortunately, that they only plan for one part of their retirement goal, half the picture, that I should accumulate the goal.
Correct.
But disbursement, a distribution phase, is left to chance. Now, why I'm saying this, if you look at data, so we have seen now, we are quite bullish on India. In fact, there's no doubt about it. But there has been instances across the world, like China peaked in 2017. And it never reached that peak. India had a long drawn range bound market between 1994 to 2003.
Of course. Yes.
Correct?
Yes.
Those kind of scenario can happen. So what would be your message be for those investors who are planning their retirement from accumulating and also taking care of a distribution phase? How do you mix asset classes to ensure that you both the legs of the retirement planning is taken care of?
See, I think what happens is that, first of all, when you are in the accumulation phase, let's say, you are 35, 40, you still think that retirement is 20, 25 years away and you are accumulating. So that time growth may be your largest priority, right? You may want to have growth and you may say that growth at any cost, meaning that you may say that I want this corpus to grow and I want a large possible corpus, and in the intermittent periods, I am willing to tolerate some volatility. So in the accumulation phase, yes, you will chase growth, right? But second point is that when you are actually retired and when you are into the withdrawal or the distribution kind of phase, then there are two things. It's not that you can completely give up growth because even if I retire at 65, I'm still going to live another 30 years probably. At
Correct.
least I may live 5 or 10, I don't know. But you have to plan for 100, no?
Correct.
You cannot plan, you retire at 65, you cannot plan for 71.
True.
Correct. And secondly, even if you have a corpus, your family and your successors will be happy if you leave them something. Correct. So so even after retirement, if you're in the distribution phase, still you cannot completely cut the cord with the growth prospects.
True.
So you need growth. But then growth becomes a little bit secondary. What becomes primary is that your corpus should be preserved and it should last for a
Longer period.
reasonably long period of time. And one element of lasting for reasonably long is that it should have some incipient growth in it. But clearly preservation becomes important. And that is where then the diversification of asset classes will matter. Now, you mentioned that there have been phases when India itself, right? Like I think even 2000, you said 94 to 2003. And then of course there was 2008, 9 till 2013 and so many of those periods.
Correct.
The point is that in those periods, you need to invest in other emerging markets. You need to have gold in your portfolio. You need to have fixed income in your portfolio. Because when you have diversification, what it will do is that in the worst of scenarios, it will curb your downside. It will avoid eating into the capital base itself. And it will give you a bare minimum return. So arriving at, and the one more thing I always tell people is that retirement is not for retired people. You have to plan retirement when you are, say, 35, 40 or 45. You cannot plan retirement when you are 65.
Yes.
Correct? So sometimes, when I talk to people who are young or middle-aged, they feel retirement is very far. They say, you cannot plan retirement after retiring. No, you have to plan now. So what happens is that you need those financial planning assistants where the corpus, how much you need to accumulate, that is well calculated.
Correct.
Secondly, what is your annual cost going to be? At what rate you can set up a withdrawal without eating into your capital?
True.
Then what type of investment you should make, saying that if this much withdrawal is going to be made, then how do I make the investment such that through the investment the capital doesn't get depleted? Volatility should not be so much. And lastly, like I said, the growth also has to be preserved.
Sure.
So I think it's a fairly, I've tried to explain, it's fairly complex. It needs somebody to sit down with pen, paper and Excel files and do a lot of calculations and a lot of very, very careful, conservative assumptions. It's not easy, but definitely it needs a lot of planning and a lot of thoughtfulness. And the other thing is that last thing, if you make a retirement plan, doesn't mean it is cast in stone.
Absolutely.
Then you will have to keep revisiting, how are you doing on the...
And that holds for all goals.
Of course. You have to keep revisiting maybe every year that are you on course, what assumptions you started with, how is the world changing. So many things need to be done.
In fact, retirement planning, what we do is, yes, you're rightly saying, we try to chase growth in the accumulation phase. And during the distribution phase, we follow what is the bucket strategy. Where you break short-term, medium-term and long-term cash flows and ensure they are the right bucket where the money gets invested. And possibly we also try to create some fixed amount of cash flow through a fixed assured interval, so that irrespective where the market is at that point of time. Now assume that you have created a large corpus and suddenly then the market goes through a bad phase. Now, humanly, it becomes very painful when you start eating into your capital. Because then psychologically it doesn't play well.
So you need to separate that growth bucket.
Yep. That growth bucket and the distribution bucket we separate earlier on. So that during the distribution phase, there is some amount of certainty. Because we feel that when you are doing retirement, it's not only about retirement. It's about safety, security and peace of mind. Come what may, my cash flows are guaranteed.
Absolutely.
Correct. So now here, one more question I have. I think what I learned from you, Aashish, is that investing, a lot of people equate to knowledge, domain knowledge, technical knowledge that we come with. What I gauge from your discussion is a lot to do with behavior and arts.
Of course, yes.
So, and most people, that is why it's shown that, right, market has delivered return of 15, 14, 15%,
Yeah.
and but people's portfolio is not compounded at that rate.
Yeah.
And that is what the behavior gap is. So, what should an investor do to ensure or mitigate that behavior gap risk?
See, I think the best way to do it, actually, where the behavior gap and where all this comes from. It comes because I have learned one thing through all my observations, which is that when you invest, right? I mean, even as kids, since childhood, you must have heard this phrase, in Hindi or English or whichever, where people say, don't get emotional here.
Hmm.
Why do they tell you? Even as kids, your parents must have said, baat baat mein rone lagta hai, emotional ho jata hai,
हाँ.
right? Why do we get that? I mean, it's the most humanly impossible not to get emotional. But still, you are told at multiple junctures in life. Sometimes in office also, when you feel something, you're said, "Saab emotional ho gaye." Correct. Why are you told that? The thing is basically that when people's emotions get invoked, they are likely to make hasty and misdirected decisions. Some of the biggest mistakes are made. Like, it is said, right, that don't make commitments when you are, very emotional. Don't make decisions when you are very angry.
Hmm.
Why are these things said? Anger, love, these are emotions,
Correct.
right? So don't make commitments, correct? On a lighter note, इतना इमोशन में आके लोग कभी कभी शादी भी कर लेते हैं ना, right? So people make the biggest mistakes when they're emotional.
Correct.
So what happens is that if you make investments in a way that the vagaries of that investment invoke your emotion, then you will make mistakes. So never invest in a way that it invokes your emotions in the first place. Correct? So let us say that, you were talking about distribution phase. Correct? Like retired person.
Hmm.
Now, it's very obvious that a retired person is dependent on the investment for their day-to-day. Like you said, there's a distribution bucket.
Correct.
Now, if a person who's retired has not taken your advice seriously and not kept a good discipline of what is the distribution bucket and what is the growth bucket, and then they are watching television or meeting somebody and playing golf with somebody, and that guy says, मैंने ये investment किया, उसका ऐसा हो गया, something great has happened, and this person is like, अरे, what am I doing here? Why am I getting 8%? And in a under like envy is also, मतलब मेरे neighbor को मेरे से ज़्यादा return मिला, that is also a horrible emotion to have.
Correct.
Right? So वो distribution bucket का जो पैसा है, बोलेगा ये तो यार 8% 9% पे तनवीर मेरा withdrawal कर रहा है. Why is this? It says तनवीर switch this from this into this.
Hmm.
Right? So that's a emotional decision. You forgot why in the first place it was done.
Invested.
Correct? And you move that into the other one. Chalo move kar diya in the quest for higher return. Now, after you do that, it works for a couple of months, and then one particular period it falls 20%. Now, what will happen? It started with envy, it will convert into fear. Then, when it is 20% down and unnecessarily some corpus has been depleted, then you will start panicking that, oh my God, if it goes down further, it is going to harm my future. So, one wrong decision leads to one more. So, it's easier said than done. But basically, what happens is that people make mistakes when emotions are invoked. And when you are investing, never invest in a way that you make so much gain that you feel very greedy, you lose so much money that you become very fearful, or you meet people whose background and financial loans are completely different from you, and then you start feeling envy, right? So it's very difficult. What I said is probably a bit theoretical, not easy to practice, but emotion नहीं आना चाहिए. ऐसा इन्वेस्टमेंट करो ही मत जिससे आपका इमोशन उसमें इन्वॉल्व हो जाए. एंड द बेस्ट वे टू कट दैट is to ensure that you invest in a way that you're never exposed to extremes. If my portfolio is 100% equity, I'll be exposed to extremes.
Correct.
If I have borrowed and put money, if I'm trading FNO, that is extreme. On the other hand, if I put all my money in the saving bank, every time and again I'll feel envy. That is also extreme. So basically doing asset allocation, making sure that your portfolio is well-rounded, making sure your portfolio is never operating on extreme of any asset class, That is something which is very important.
In fact, I've had a lot of questions when people come and tell me on this, because you are talking about risk and return. Okay, very interesting question, because they went to some website and the fixed income product was guaranteeing a 14% return. You think यार वो fixed income product is guaranteeing a 14% return, आप तो मेरा इक्विटी का 12% बोलते हो. Okay, then why should I take risk? Unfortunately, investors are able to judge return, compare returns, but they don't have the ability to compare the risk. So what are the red flags that they should be watching out for in such kind of investment
एक है ना, आपका ये जो क्वेश्चन था ना, फिक्स्ड इनकम का 14% है, तो तनवीर आप इक्विटी का 12 क्यों बोल रहे हैं? ऑन दिस देयर वाज वन स्टेटमेंट. आई एम नॉट श्योर, बट आई थिंक आई रेड इट इन सम लिटरेचर फ्रॉम हावर्ड मार्क्स, व्हिच इज वेरी फेमस इन्वेस्टर.
हाँ, correct.
So probably it was him only, but the message was like this. The message was that the biggest mistakes in investing are made when you chase high returns in an otherwise low yield environment. Okay? So going back to this fixed income 14%. Now you need to see what do you mean by otherwise low yield environment. So Tanvir, we are living in a world where government is borrowing at 6.5% taxable rate.
Correct.
Right? We are living in a world where inflation, the government, मतलब मैं एजुकेशन का इन्फ्लेशन और फॉरेन ट्रैवल का इन्फ्लेशन नहीं बोल रहा हूँ, बट द गवर्नमेंट पब्लिश्ड इन्फ्लेशन इज 3-4%. Our nominal GDP growth rate is 9-10%. Correct. So what happens is that if you put money in the bank, right, saving rates are 2.5%, and 1 year FD rates may be 5.5%, and you're getting home loan for 7.85 and all, right? So that's what I mean by a low yielding environment. You go back 5 years, 10 years. Government was borrowing at 8 to 8.5%. Inflation rate was 5 to 6%. Home loan was 9 to 10%. India's nominal GDP growth was 12 to 13%. So उस माहौल में आपको इक्विटी में 17-18% मिला. अब गवर्नमेंट का रेट 6% है, इन्फ्लेशन 3% है, नॉमिनल जीडीपी ग्रोथ 9% है, आपका होम लोन का रेट 7.5% है, तो क्यों आपको 14-15 मिलना चाहिए?
Correct.
Right? So what happens is that when the entire environment is suggesting lower yields, एंड बाय द वे उसमें आपका नुकसान नहीं है. देखिए, अगर आपको 15% रिटर्न मिल रहा है जब इन्फ्लेशन 6-7% है,
नेट,
तो आपका रिटर्न 8% है.
नेट रिटर्न.
हाँ, अगर आपको 12% रिटर्न मिल रहा है जब इन्फ्लेशन 3-4% है, तब भी आपका नेट रिटर्न 8% है. सो व्हाट आई एम ट्राइंग टू से इज दैट व्हेन द एनवायरनमेंट इज सजेस्टिंग दैट यू आर ऑपरेटिंग इन अ लो यील्ड एनवायरनमेंट, ऐसे समय में आप जबरदस्ती 18-19% जब ढूंढने जाते हो, तो पहले तो कायदे से आपको 18-19 मिलना नहीं चाहिए. दूसरी चीज, अब आपको 18-19 दे कौन रहा है? नाउ हु इज बोरोइंग? सी, इफ यू गो टू सम प्लेटफॉर्म एंड समबडी इज पेइंग यू 14, तो भाई वो आपसे 14 में पैसा ले रहा है, तो कहीं दे मस्ट बी डिप्लॉइंग समवेयर वेयर दे मस्ट बी गेटिंग 18, 19, 20. नो, द क्वेश्चन इज हु इज बोरोइंग एट 18, 19 and 20?
Correct.
When a normal guy can get a personal loan at 12% and a home loan at 8%, who under the sun needs to borrow at 20? Basically, nobody is lending to them. So they are borrowing at 20 with a particular risk assessment. So sometimes what people need to understand that sometimes fixed income can have more risk than equity.
True.
Correct. In fact, there are examples where equity gets diluted and equity investors survive, but the fixed income gets completely written off.
Yeah, it's a binary thing.
Yeah, it's binary.
Yes.
So my net point is that don't chase high yields. When the environment is for low yields, you will only end up making big mistakes.
In fact, you put it beautifully. You should ask a simple basic question कि मुझे अगर होम लोन 8% में मिलता है और वो कंपनी को सिक्योर्ड लोन अगर 14% में मिल रहा है, so as an individual I'm better person and he's borrowing at 14-15%. So what is the probability of that money returning back to me?
और वो 14 में लेके देगा किसको? मतलब हमको 14, वो भाईचारा में तो नहीं, ही इज नॉट रनिंग हिज कंपनी टू पे यू 14, नो, ही इज आल्सो वांटिंग प्रॉफिट.
True.
So at what rate it must be deployed onward? You have to think.
And at that deploys, will he get his money back?
Yeah, and what risks are being taken?
What risks are being taken? Absolutely. So last question I will ask Aashish. A lot of people I've seen go to the website, compare historical return, and pick funds and tell to invest. Okay. So inevitably, either that cycle or the market segment would have played to a great extent.
Yeah.
So what would be your advice to such investors who look at historical return and start investing in the market or try picking an investment product like that?
This has become such a big problem that even our regulator has started telling equity mutual funds, to publish this new one more ratio. Since April 2025, it became mandatory that, just chasing last 1 year, last 3 year. See, previously people used to look at only returns. Then people became a bit more knowledgeable. They said not returns. We have to see returns more than index.
Correct.
So alpha. But what happens even in that, if you chase the past, it always happens. Last 1 year, the guy is number one, then you invest, then it becomes next year number 20, right? Because winners keep rotating. Depending on what is happening in the macro environment, which style of fund management, which sector, which factors, it keeps changing. So now the regulator has made it mandatory that all the actively managed equity funds have to disclose this new ratio, which is called information ratio, which is basically alpha. So alpha is your outperformance over the benchmark. That alpha is the numerator. And the ratio is that alpha divided by standard deviation or volatility of alpha. So basically what they are saying is that you generated alpha, that's fine. But for last 1 year, 3 year, 5 year, you also show how much your alpha has fluctuated. So previously people were looking at returns, then they look at alpha. The regulator is suggesting people, educating people to say that don't just look at alpha, you need consistency of alpha. So in cricketing terms, basically, do you need somebody who is टिक गया तो 200 मारेगा, नहीं टिका तो पहले बॉल में caught behind.
Correct.
Or the other is somebody who will say कि भाई maybe in a good day scores 100 but generally never goes out on a duck. So you can have both batsmen with average of 45. The first guy scores 200 on a good day and goes out for 0 on a bad day. The second guy also averages 45 but on a good day scores a century and even on a bad day
he contributes
20-30 run तो करके जाएगा. So you need the second one, no?
Correct.
See, because stock market is always, equity is always last day of a test match. It's never an easy situation. So you need more consistent players.
Correct.
So I think that chasing past return is not good. You should look for consistency.
So I'm just trying to knit together what the missing link. In investors' journey, the missing link is that one, they don't plan.
Yeah.
Two, is they pick up ad hoc investment.
Yeah.
Okay, which is not suitable to the investment. That's the second link.
Yeah.
Third link is trying to compare with product with the highest return only.
Yeah.
Okay, not understanding the risk. And fourth is not trying to behaviorally let the emotions override. So these are the missing links in an investor's portfolio that we wanted to highlight. Now, Aashish, what has been your own personal journey? If you have to give one strong message to the people to ensure that they get over this missing link, what would that be?
See, 2 or 3 things. I think that one is that, never think that, see, there is one basic behavioral issue. It is true of all of us. When we start understanding the past very, very well, we get this wrong perception that we will be able to predict the future.
Correct.
It's a disaster. Just because you understood the past very well doesn't mean that you'll be able to predict the future.
True.
In fact, if you understand the past very, very well, then you should always be able to draw one simple conclusion that life is uncertain. And it's a series of coincidences. And never mix luck with skill. Correct? So, how much you can reduce the luck and how much you can bring more planning and more discipline, that should be your goal. The other important thing is that it's not as easy as it is outwardly made to be. जितना बिकॉज क्या है कि अगर पूरा का पूरा मैथ्स होता ना तो बहुत लोग सीख लेते हैं इसको.
Easy होता है.
But the truth is that, like we discussed, it is not fully maths. It is a mix of emotional control and behavior. Correct? And the third thing is that however good you may be, you'll end up in the gym, you know exactly what to do. But you will still need a trainer.
True.
You'll still, if nothing, you need a sounding board. If nothing, you need someone to keep you on the right track. If nothing, you need somebody to, make sure that you don't get into distractions or emotional turmoil. Correct? So I think these are few things which are very, very important. It's not something to be taken lightly. It's not as easy as it appears. And it needs a lot of doing.
Return is an outcome.
Yeah.
Okay. And disciplined investment is a process. Okay. So, unfortunately, a lot of people give a lot of importance to returns and not to the process.
Yeah.
What are your views around that?
See, I think you should remember one thing. Like, I learned it probably the hard way as a businessman. You should never judge the quality of a decision based on the outcome. Because see, we all are dealing in capital markets,
Correct.
stock markets, bond markets, capital markets. And in capital markets, there are too many variables. Economy, government policy. Within economy itself, there are zillion variables. Right? There is corporate performance. There is the quality of execution of our fund managers, analysts. There's so many variables. So basic point is that when you are dealing with stuff like capital markets, where you're dealing with uncertain outcomes, where outcomes are neither predictable nor directly in your control. So when you're dealing with something where the outcomes are neither predictable nor directly in your control, which means you cannot control the outcome. So in something where you cannot control the outcome, the only thing you can control is the quality and consistency of inputs.
Correct.
And any outcome which you get without a identifiable process, you should assume that that outcome is not replicable and it is not sustainable.
It may be luck.
इट मे बी लक. मतलब देखिए, अगर आप कुछ मेरे को करके दिखाते हैं, मैं आपको बोलूँ वाह तनवीर सही गया, फिर से करके दिखाओ, बोले पता नहीं यार हो गया. तो you can imagine that it's not replicable. If it is not replicable, मतलब आपने उसको सोच के प्रोसेस ओरिएंटेड तरीके से नहीं किया है. तो भाई वो एक बार आउटकम आ गया हो.
Very true. Correct. Very true.
So I think that's all said and done. However laborious or cumbersome it may be, ultimately you need outcomes which are through some process. और एक चीज़ क्या है पता है कि प्रोसेस फॉलो करने से समझो कि आप एक्सपर्ट है, आप बहुत माहिर हैं, यू आर अ विज किड, एंड यू प्रोसेस नहीं, हम जब बोलते हैं लोग नेचुरली गिफ्टेड है, टैलेंटेड है, बट फिर भी प्रोसेस डालने से क्या होता है, आउटकम का वेरिएबिलिटी तो कम होता ही है.
हाँ, करेक्ट. And that is that leads to consistency.
Yeah, of course.
In fact, this is a very interesting thing also. And at times we find it difficult and we work hard. So you know that we invest in equity for a long-term period.
Yes.
And we also know that fund managers do not come every day saying, आज तो मैं blunder करूँगा. नहीं, because fund management is not only about picking the right stock.
Yeah.
Or this which you call error of commission. It's also error of omission. Maybe you have missed a sector or stock which has run up well, right? Like you said, zillion of variables there are there.
Yeah.
Now, we inevitably pick companies which have a strong process. Fund houses which are strong process oriented.
Yeah.
And if we feel that a strong process oriented is there, irrespective of the outcome, we stay on course with those fund houses.
Correct.
But we are often questioned that कि भाई ये तो आपको, why are you sticking? Why we are not exiting this fund? It's temporary outperformance. So what would be your advice to such investor if there is two kind of a scenario, a short-term underperformance of 1, 2, 3 quarters, or if it's a consistent underperformer, then something question about. So what would your advice be to investors from reviewing the fund from a very short-term lens perspective?
See, it is well known that, whether it is me picking some fund manager or you picking a fund manager or investors picking a wealth manager or investors picking a fund manager or whoever, like you rightly said, that if first of all, the outcome is the table stakes. Meaning अगर किसी का performance अच्छा है या किसी का performance impressive है, तो आप उनको पूछेंगे कि भाई बताइए कैसे किया, आपका क्या process है. Because we just discussed that you cannot buy based on outcomes.
Correct.
So the point is that you will give me an appointment if I have good performance or if I have good credentials. Once you give me an appointment, then you will ask me, अच्छा बताओ भाई ये कैसे किया आपने, ये आपकी इतनी अच्छी टीम है तो करेंगे क्या ये लोग, what is the process? So let us say that you put us through a due diligence, we explain the process to you, and let us say you are satisfied, and let's say you invest in the fund. Now 1 year, 2 years, fine. Let's say there is a third year where the performance is not up to the mark. You see that in the league tables we are falling or whatever it is. And let's say you observe for 1 or 2 quarters and you are finding that there is something concerning. So you call us and say that, okay, couple of years is good. Now last couple of quarters, things are slipping. What do you think? If I start, so I have to explain to you in light of the process which I first said. No, I can't just start talking anything randomly, right? So what I have to say, that this is, as you are aware, this is the process or this is the way of managing money.
True.
In these environments, we produce these results. In the last 2 quarters, this is the kind of environment we are operating in. And this is why in this environment, this process is not producing the same outcome. मतलब अगर आप एक फैक्ट्री में भी काम करते हैं या आप किचन में भी काम करते हैं तो भाई फलाना फलाना इंग्रेडिएंट्स है और फलाना फलाना रेसिपी है. अब वो सेम इंग्रेडिएंट्स और सेम रेसिपी और सेम प्रोसेस से खाना अगर अलग बन रहा है तो आप पता करोगे ना कि भाई कहीं सप्लायर चेंज हुआ है क्या, कहीं टेम्परेचर गलत हो गया है क्या, कहीं 12 मिनट के बदले 10 मिनट पकाया था क्या. That's what you will investigate, right?
Correct.
So under these environments, this is how it was working. But now the environment has changed. So this process is not delivering the same outcome. So I explain you. Ultimately, at some point in time, if I start changing my process, meaning I start telling you a completely different story, or the environment changes, but I am still not able to cope up, or I just keep observing what is happening, but I don't take it as a feedback and don't do any tweak in my process. Like you will say ना कि अभी 12 मिनट के बदले 10 मिनट में पकाने का है तो आप इंग्रेडिएंट को चेंज करेंगे ना. करेक्ट. सो द पॉइंट इज दैट it's always, when the performance is not there, in light of the process which is being followed, one needs to be able to explain what is working, what is not working, and what changes need to be made. If I don't accept that the performance is not good, if I am not able to explain what is happening in light of the process I follow, if I am not able to explain what corrective action I propose to take, then none of the three, right? So then you have a question there. I mean that should you sustain or should you back it or not?
Correct.
So when performance is not there, people need to be coherently be able to explain why it is not there in light of the same process and philosophy, not by changing something. Because sometimes people say some process and philosophy and they execute something else. Then you cannot.
What they talk and what they walk should be same.
Yeah.
Great. So now, Ashish, one more question is that today in the era of AI, okay, a lot of been talking about that AI can replicate a lot of the task.
Yeah.
Okay. And given that investments involves a lot of emotions, do you think at some point of time AI, or we could have a complete DIY platform which will be able to also compensate for think and feel instead of...
See, I think it can be probably, like say, I think, see, the power is basically that these models are self-learning. Correct. Meaning that if you are investing in a particular pattern, right, and let's say you're investing as per a AI-based model. So obviously you have fed in that it should produce certain kind of outcome with certain type of risk profile. Correct. Now what happens is that if if the model is producing outcomes which are not as per the expectation, correct, and it will also obviously check what kind of reactions the investor is giving, because it can check, like for example, how many times you opened the app, what type of interactions you are having with the investment, correct. So it can also auto-correct. So I'm not sure if it can be completely autonomous, but given that these are self-learning models, and given that it can take a myriad set of unstructured inputs, right, I think that at some point in time, yes, definitely you will find that it is automated to a very, very high extent. But the thing is that even if it is self-learning and even if it is automated to a high extent, still at some periodicity or at some intervals, somebody will have to reset the, what I mentioned about the outcomes and the risks. Somebody will have to reset the parameters and somebody will have to reset the boundaries or the operating limits. Correct. So it would still need some review. I mean, it cannot be completely no manual intervention. Maybe the menial tasks will get automated, but higher order of intelligence related tasks. See, because ultimately that is made by humans.
Correct.
So some operating parameters or some outcomes or some input parameters, you will need to keep on tweaking. And some of those parameters need to come from human beings, either the advisor or the investor.
Yes.
Or whoever is the tech expert making those models. So I don't think it can be completely, hands off. But it can definitely reduce human intervention and the emotional biases.
Great. I agree to you out there. In fact, maybe uh, not only extent, if the stake goes up, you may experiment with smaller amount of money, but the
Yeah.
amount goes up, you may want some validation from him by the time.
Yeah,
That could be.
absolutely.
So one more thing I've always believed that simplicity creates wealth.
Yeah.
And in today's era, a lot of people come with complex products, future
Mm.
option, derivatives, all the structures.
Mm.
What are your thoughts around that? Okay, whether those derivative complex structures make returns, or it is that simplicity that will create wealth.
See, it's like this. One thing is a fact that the uncapped upside, nothing can beat long equity. Correct. The only thing which can beat long equity is if you do long equity with leverage. But when you do long equity with leverage,
Yeah, the other way around.
the downside also is
Also
right.
exponentially
It can
grows.
go up like a rocket, but it can crash also like
Correct.
a rocket. So for a moment, leave the leverage aside.
Hmm.
The point is that ultimately nothing can beat long equity. And the real purpose of using futures and options, etc., is basically for hedging.
Hmm.
So, you want to invest in equity, but if you invest in long equity, it comes with very high level of risk and volatility. In fact, I have seen that, in the past, when you study asset allocation models, what you find is that when you cross 75-80% equity allocation, beyond a point, it only increases the volatility much more than it increases the returns. So, if you are using derivatives to reduce downside, or if you're using some combination of asset allocation to reduce downside, that is good. Because if you reduce the downside, if you reduce the volatility, it helps you stay longer. And like I myself said, it keeps emotions at bay.
So risk reduction in a way does not generate extra return. It also ensures that your downside is minimized.
Yeah, it reduces volatility basically.
But a lot of people are using as an alpha generating strategy. So that exactly could be a misleading way of using it.
Yeah, I mean, see, it cannot on its own.
Hmm.
See, the point is that it will generate alpha in what sense? That it will basically, look at it this way. Like nowadays, people are talking about long short,
Correct.
right? So you are saying that, okay, you will have long positions, but sometimes you may also have a view that something is overvalued and you may also make money from
Short.
short positions. But ultimately, when you do long as well as short, right, it's not like all your, and there is a counterbalance there. And it's not like both your positions will be accurately right. Some might get netted off or work against, right? So ultimately, nothing can beat long equity. The only thing, like I said, the only thing which can beat long equity is leverage long equity, which comes with unbridled risk.
There's an extra risk you are taking.
Yeah.
Actually.
So if you can tolerate some volatility, nothing will beat long equity. Lot of people, despite saying, they ultimately lose sleep when the market is down 20%. So for them, asset allocation, running strategies which are hedged, I think that is better option for people who cannot tolerate the volatility.
For users' sakes, I want to ask one more question also. What about your thoughts on a lot of people invest in crypto and Bitcoin of the world?
Yeah.
Okay. In fact, like equity, other thing, we have a model of valuing that equity, but unfortunately, we don't have any valuation metrics for Bitcoin or crypto of the world. And yet, people try to chase a return by investing in crypto. What are your thoughts around that?
You see, I feel that I don't write off anything and I don't think anything should be. I personally feel that, it is here to stay. The reason is 2-3 things. One is that it's an alternative. In one way, you can say it's an alternative asset class. Definitely, it's not a medium of exchange. It's not a store of value. It's not a store for transactions, etc. But it's an alternate asset class. Today, when people are worried about will the dollar be, how strong the dollar will be, is gold the right alternative? Are other currencies going to be there? So that's why one of the options which is coming up is cryptocurrency. Correct. So I think that people, there is one rule which is that don't invest too much into something which you can't understand. But as far as crypto is concerned, I feel that we should make the effort to understand. And I feel that in some form or format, it is here to stay. But I don't know whether it is Bitcoin, stablecoin, Ethereum, or what it is. Correct? Because they are just types of application or types
Correct.
of currency.
Correct.
The technology is very valuable. The technology is here to stay. And in some form or format, there will be alternate asset classes. So I'm not an expert, but I would say that, we should not write it off. We should make efforts to understand. And as far as investors are concerned, if they can understand, nothing like it. If they can find an advisor who understands, that's also fine. But that rule applies that don't put too much money, or don't put all your money, or don't bet big on something which you don't understand.
So you should be like a achar in your thali, not the.
But it's a learning phase.
Correct.
So get acquainted with it.
Hmm.
The technology is here to stay, I think. Get acquainted with it, learn about it, find out experts if you can, but don't bet into something which you beyond a point can't understand. I mean, I would not bet the house on it.
Great. Thank you so much, Ashish, for helping our investors understand the missing link. And to sum it up, the missing link is not one. There are multiple missing links. You have to find out what's your missing link. To sum it, the missing link could be your financial planning. The missing link could be choosing the right appropriate investment product that best suits your investment objective or a goal. The missing link is reviewing the investment portfolio based on your objective. The missing link is not selecting investment product purely on the basis of just return or a hype created. Evaluating the risk and return appropriately. The missing link could be avoiding behavioral mistakes because of market's volatility. So find out what's your missing link. And if you're able to plug this missing link in your portfolio, you will be able to create long term sustainable wealth for your future well being.